Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
Our engineer, our producer in the studio says we have a call from Trent. Trent, you're on the Spend Life Well show. What's your question?
Hi, Mark. Good morning to you, and thanks for holding out solo this morning.
Yeah, well, it's a little bit harder when you don't have somebody to talk to. But I'm glad you called. You're now the co-host, Trent.
Oh, yeah,
What's your question?
A little bit. Well, I got two kind of haunting questions.
All right.
One is, you remember all the manipulation couple of years ago when the market started quickly down in about February of 2020, and the Fed or the Treasury, they reached in and they started buying up things to stabilize things, and they
are adding $180 billion of treasuries and mortgage-backed securities a month. Plus, all the stimulus that put into the economy.
Yeah, they put tax dollars basically into the economy, or they created money. They were churning out money like crazy at the mints, and of course that didn't help our inflation possibilities. So anyway, that staved off and caused the market to start back up in confidence. And it went all the way back up fairly quickly with that strategy. But there were a lot of observers out there saying all this is doing is postponing the inevitable downhill race of the market.
And Trent, there were a lot of folks that argued that we really didn't even need that stimulus. The economy was healthy. And yes, there would have been a slowdown from the shutdown, but did we really need all that stimulus to keep the economy running? And so there's a good debate there. But what's your question about, what's the effects of that?
At the current moment, do you think that move, that decision, that strategy, that manipulation only postponed the inevitable track downhill and toward a fairly deep recession?
Well, we were starting to see a few signs that things were starting to slow down a little bit, but there was enough data out there, I believe, that said the economy would have kept on going, but not at the pace that we had seen during the Trump administration, of really much higher than we had seen in the last 12 years of economic growth. So, it's one of those things, Trent, that we can, in hindsight, we can debate about and said, well, it would have done this, would have done that. But I think that we would have had, the global economy was basically shutting down. And that's not the same as the economy shutting down. In other words, we artificially put the brakes on. And we've never done that around the world. We've never done anything like that. And so I think we're still going to be talking about the effects of the pandemic shutdowns, the effects of so much stimulus. What's that going to do going forward? I think that, yes, in some ways you delayed an economic recession. I think we're beginning to see that's happening now, but it's because of a number of other different factors that are out there. Demand is falling off. So I think you're right that it just inevitably delayed it a little further. But I have no idea. I don't have a crystal ball to say that we were on the cusp of a recession in late 2020 with all this stimulus. I think that the stimulus has caused a lot of harm to our economy. Despite what the president said this week, he was talking about U.S. inflation being lower amongst all the other developed nations, and we're in fact the highest. I don't know if he just got his cue card messed up there, but we, in fact, of all the larger developed nations, had the highest inflation of all them. And it's because we, in part, introduce so much stimulus into this economy, and that's going to have a negative impact at some point. We're seeing that through higher inflation, and we're probably going into a period of stagflation, of high inflation and low economic growth. You also, Trent, had a question about oil producers and so forth. Can you give me a little bit more information about what your question is?
Yeah, I do. We're all still complaining about the $5 across the nation average price at the pump. But meanwhile, last week, oil producers and oil companies, their stock just plummeted 20%
Yeah, some of them did.
over
Yeah.
a week's time. And I just wonder, has anybody noticed that, or how is that explainable in terms of their profit level still remaining high?
Sure. Okay. I'll answer your question and go ahead and let you hang up there, Trent. But, I think one of the things that was obvious this week is, well, we have been waiting for this for some time. Just the law of averages says that the price of a stock will revert to the mean at some point. In other words, it'll revert back to the averages. And we just have not seen a dramatic decrease in oil company stock prices in some time. In fact, when we measure, there's an ETF index that we measure that tracks the energy industry. That took a big hit in the last 2 weeks as well, and we were expecting that, not knowing when that would happen. But this could be just a pause that refreshes in the energy sector to maybe allow that to continue to go on up. We don't have a crystal ball. We don't know exactly what that particular sector will do. I will tell you that I have a firm belief that oil demand is not going to fall right now, and even with $5 a gallon gas. And so, while we were not surprised that we saw that big decline in energy stocks this last few weeks or so, we never like to see that happen. I mean, the energy sector before this little pullback here was up about 52% for the year, looking at the ETFs. And so, that was not surprising, but at the same time, it was unexpected from the standpoint of the energy companies have been doing so well for so long.